So in today's video, I'm going to explain to you guys why I'm betting so much on AI in 2026 and why I believe that AI could still potentially make you a decent amount of money in 2026. I'm also going to show you guys multiple events that are coming up within the next couple of weeks that could affect the state of the market. So make sure you stay to the end of the video. I value your time. With that being said, let's get right into it. All right, so the first reason why I believe that AI still has a lot of potential in 2026 is because of the technical analysis, and it's currently playing out right now. So let's take a look at the screen and show you guys what I'm talking about. All right, so we take a look at the market, right? For the past 3 months, I mean, it's basically just been going sideways, right? I think this is predominantly because we had such a massive run up after the bottom of the whole tariff situation that we saw back in April, right? The market basically went straight up for about 6 months, and now it kind of just consolidated. So the past 3 months, the market has not been on easy mode, right? It hasn't been easy to trade. You can't just buy calls and expect to make money easily. There's just a lot of things that took place, right? Macroeconomic stuff, geopolitical stuff, right? That kind of caused the market to just basically go sideways. Almost like the market needs more confidence for it to keep on going up, right? And we see the exact same thing if we go to like QQQ. Right, this is a more tech-heavy ETF, right? Basically just been going sideways for the past 3 months. And we go to individual stocks, let's say, for example, Microsoft, right? Basically seeing the same trend. Regardless of these companies having amazing earnings, right, raising their guidance, doing everything right, the market is still just basically been going sideways or even in a downward trend for some of these stocks. So we go to NVIDIA, right, we basically see the same trend, right? Regardless of NVIDIA having amazing earnings, right, raising their guidance once again, showing that AI is not in a bubble, right, the stock has basically just been going sideways for the past 3 months. And we can see this example multiple times with a lot of stocks, right? A lot of companies, stocks having amazing earnings support, amazing guidance, but the market itself is just in a stagnant state where it's just not going straight up like what we saw the past 6 months after the tariff bottom back in April. And look, this has not been easy to trade, right? Unless you caught the bottom of some of these drops and had a quick swing trade, right? That's the only way you can really make money from this. But if you bought options expiring a couple months out and you're just being patient, you probably lost a lot of money due to time decay, right? Because the stocks and the market as a whole has basically just been going sideways for the past 3 months. And it happens, right? Sometimes the market is going straight up. Sometimes it's going straight down. Sometimes it's just going sideways. And that's just what's happening right now. But it's a common trend that's happening with these AI companies that I want to show y'all, and it's currently playing out right now. So we take a look at TSM, right? This is the Taiwan semiconductor company, right? So they basically manufacture your AI chips like from NVIDIA and various other customers, right? So this stock has also basically been going sideways for the past 3 months, and it finally started to have a big breakout that we're seeing right now. But what I want to show y'all is that it's a common trend that's been happening in the past couple of months. So we go back here. You guys can see that this is back in July, right? So TSM had amazing earnings report, right? Had a double beat, raised their guidance, everything went well. The stock came down after the earnings, right? Regardless of the good earnings report. And it went stagnant for about a month, right? So this is from July all the way to almost September. The stock basically just went sideways. And as it got closer to its next earnings report, once again, right, the fundamental financials are still intact. It's still a great company. It had a massive run up leading up to that earnings report. And guess what happened? Earnings report came, company had a double beat, raised their guidance, and the stock dropped a significant amount and basically just went stagnant. It's been stagnant essentially for the past couple of months, right? And now it's finally starting to have another breakout, right? As it gets closer to its earnings report that's happening on the 15th of this month, right? So similar trend, these companies, they tend to have massive breakout as they lead to their next earnings report. Then once the earnings happen, they have some type of consolidation or some type of pullback, right? It gives you an opportunity to get in, especially if they have a double B and they raise their guidance. So I want to show y'all a similar thing that happened with AVGO, right? It's the same trend. And this is why I believe that it's still a good opportunity to get into like any type of AI plays. Me specifically, I'm betting on AVGO and NVIDIA. It's because the fundamentals are still intact, right? And I believe that these companies are still going to have amazing earnings support on their next earnings report, and raise their guidance, have a double beat, right? Do everything right, which will, allow you to get in at a cheaper price now, especially since it's significantly down from its all-time high. But what I want to show y'all is we go back here, right? The same thing kind of happened. We go back here. This is even in June, right? AVGO had amazing earnings support. The stock came down a little bit. went sideways for a little while, but it had a massive run up leading up to its next earnings report. Once again, the stock had a amazing earnings report, right? This time it went up a little bit, went back down, consolidated for a while, right? And as it got closer to its next earnings report, you guys can see the massive run up that it had. Once again, had a major earnings report, then the stock came back down. So the same thing happens over and over again, at least for the past couple of months from what I've seen, right? And what I'm betting is going to happen again, right? I'm not saying it's 100% guaranteed, but AVGO could potentially just go sideways until its next earnings report. And I'm assuming that, they raised their guidance. They're probably going to have a really good earnings report. And the company could, the stock could see a massive run up again and pass its previous all-time high as it gets closer to its next earnings report. So this is why it's so important in situations like this. You got to have patience. You got to give yourself time for things to play out, right? This is why I buy leap options. If I buy options, I want to put it out as far as possible, right? In this case, some of my options expire in late 2027, right? Because if the stock just goes sideways until the next earnings report, you're going to lose a lot of money from time decay, right? It's called theta. And a lot of traders don't know that. They're wondering why they're losing money even though the stock isn't really dropping. It's because you can lose money from, time. And you just have to be patient, right? I'm not saying AVGO can't skyrocket and go all the way back up in the next couple of days. I don't know what's going to happen from here, from this earnings report to the next earnings report. But I know that this company fundamentally is still a good company, right? It's showing that there's still a high demand for AI products, right? AI chips, right? Things of that nature. And more than likely, the stock is still undervalued significantly from its previous all-time high, and they beat earnings again. You could see a decent run-up and make some decent money from that opportunity. And it's the same thing with NVIDIA too. Right, the same concept. NVIDIA has basically been sideways for a while, right? As we got closer to the earnings report, NVIDIA had a massive run-up, right? NVIDIA had an amazing earnings report. Stock came down, and it's basically just been going sideways for a while. NVIDIA is probably going to have another beat on its next earnings report, right? Whenever that is, and the stock is potentially going to have another run-up as it gets closer to that date. So I still believe that fundamentally, all these companies are doing a really good job. And that's not the reason why, the market or the stocks are going down. There's just a lot of things that are taking place outside the fundamentals, right? Macroeconomical stuff that could, causing the market not to have too much confidence. And this is in situations like this, in times like this, you just got to be really patient and think long term. So I know I just said a lot, but I hope that makes sense to y'all, right? I'm basically betting the fact that I believe that these companies aren't down because of the fundamental financials, right? They had amazing earnings report, raised their guidance, did everything right. I'm betting on the fact that these companies, as the next earnings report comes closer, they're going to see a significant rise up, right? I think the market is just in a state where it needs more confidence to really start boosting these stocks up. And we're seeing the exact same thing play out with TSM right now. So I think you just got to be patient, get in a good position, and just, wait it out and see how it plays out. So with that being said, let's talk about some other major events that are coming up within the next couple of weeks that you need to pay attention to and be aware of. So we got the unemployment rate coming out on January 9th, CPI coming out on January 13th, and then at the end of the month, we got the FOMC meeting from January 27th and 28th. So why is this all so important? Regardless of how your company or stock is doing fundamentally, these are the things that could bring the value of your stock down. So this is what we want to see. Based on the past report, CPI, also known as the inflation indicator, has been coming down, right? So we want to see CPI continue to come down or stay stagnant. All right, we don't want to see inflation start going back up, right? Because this could cause a negative effect in the market. As far as the unemployment rate, we saw that the unemployment rate did increase from the past report. So if the unemployment rate does go up a significant amount, even a little bit, once again, this could have a negative reaction and cause the market and stocks as a whole to come down. As far as the interest rate decision, right? If the Fed, for whatever reason, decides to hike interest rates instead of cutting interest rates or keeping it the same, right? The market could have a negative reaction to this. So I doubt the Fed are going to hike interest rates. More than likely, if unemployment stays as is or even goes up, the Fed will probably have another cut. If the Fed cuts interest rates, this is naturally bullish for the market because it just makes it easier for people to obtain money, for businesses to take out loans, right? For money to just be accessible as a whole. So these are things you want to keep in your radar. Like I said, it could affect the overall movement of the stock market. So I hope this video made sense to you and I hope you learned something new. But most importantly, I can't reiterate this enough. I cannot predict the future. This is simply what I think makes the most sense. It doesn't mean that I have to be correct. We could see a massive crash in AI and all the AI related stocks could not go up anymore in 2026. I don't know, right? You got to do your own due diligence and make sure that it makes sense to you. But let me know what other stocks you're looking forward to getting into. Thank you guys for watching the video, and I'll see you guys in the next one.